Good morning, everybody. Welcome to the Flow Show. Got to Friday at last. Another exhausting week for trading and news and everything else going on. Today, I'm lucky enough to be joined by my old mate, Harry Daniels from Livesquawk. And he's going to be a welcome voice on today's show, hopefully, to get through the noise that we got. Morning, mate. How's it going?
Well, I don't know about welcome voice. I was had a couple of beers last night at a reunion so my voice is a bit shaky, but we'll give it a go.
Yeah, definitely, mate. Definitely. Right, before we get stuck into things, I want to show you just what Harry gets up to. He's the owner of Livesquawk, which you can see there, giving us pretty much all the news as it happens from all the major news wires. H, I've known you obviously a long time. What's the latest stuff going on at Livesquawk, or also you can give our viewers a bit of insight into what you guys do there.
Yeah, well, alongside the Squawk service, which have been around, I think, over 20 odd years now, really providing a service to traders. We've now begun podcast. We've been doing it since the back end of last year, but we do podcasts. We preview, and we're going to start reviewing key events and key data points throughout the course of a particular week. And it's really just to give everyone a bit of an insight into what the bank research is saying, what traders are saying. We have a couple of experts on. You've been on a couple of times yourself, and we just really try and pick through the pieces of data or as I said, the central bank event, so that people have a better understanding of what's going on as and when things happen. So we'll be carrying on that. That's the new series. We've got LS Commodity Corner, which covers, as it suggests, most of the commodity sector, and a bit of Bitcoin, as well as the more conventional financial instruments as well. And again, it's just really to give a bit more insight into what traders are looking at. It's written by Chris Stadley, who is a long-term veteran of the commodity space with his newsletter. So it's just bring a bit more light into what can be sometimes be a shrouded sort of world, the commodity world. So yeah, those sort of things we're doing at the moment. There's a lot more exciting stuff to come that I'll bring to you over the course of the next few months if I'm on again. And yeah, I'll let you know. But thank you for that.
Yeah, no worries, mate. And it's really different days now, isn't it? Different situations. I mean, before, information stream was pretty limited, sort of the Bloombergs and Reuters and everything else like that. But there's such a flood of information coming in now. For you as a Squawk and news outlet, if you like, it must be a bit of a tougher job. Hence why you have to move into other things like podcasts, like the shows you do from previewing the data and stuff. How have you found this new information blast era, shall we say, and incorporating that?
Well, it's interesting. It's definitely a blast at the moment. And look, we had it first time round. We were talking about Trump. Let's be honest. It's become more prevalent since the president has re-entered the White House. But generally speaking, it's hard. I mean, it's trying to make sure we're ahead and covering all angles and all potential news sources is not an easy job, and it's a moving feast. But we train our guys up, and our guys, some of our guys have vast experience in the markets, have traded themselves, have been news traders, and looked at fundamentals, so they have a grasp of what it is we're looking for and what our clients want to hear. And then that's mixed with some of the younger guns who basically have all that tech knowledge and know where to go find the information, and combined, it works really well in terms of the experience and the trading knowledge that we have from previous days, mixed with that, the young guns, as I said, who understand where we need to go and look for that from a technical perspective. But it's ever changing, and trying to keep up with it at times is hard work, but it's half the fun as well. In terms of what we do next to trading. When I was a trader, I loved it. It was brilliant. Next best thing for me is being first to the news, and that's where I get my kick now. And when I'm on the
Yeah.
Squawk, and when our guys are on the Squawk, is being first to that news. I think it was an instance it might have been last Friday actually, or Friday before. Well, yeah, last Friday when the German government, the incoming government, voted to go with a debt break, and we got that from a journalist on social media. I think it was about 10 minutes before the wires had it, and we pushed it out to our audience. And you can see from the charts just the impact when we pushed it out. And
Yeah.
there's a slight selling of the bunds, and then Bloomberg picked it up and they hit it. And from us, because one of the journalists there contacted us and asked us where we got the news from, and then you just saw a massive spike down in the bunds, in bund futures. So we're still doing a job, and hopefully we can get more of those headlines out there and feed our audience and our clients the news first.
Yeah, and well, I've been with you guys for a long while now, even from the Forex Live days, and I say your service is second to none. It certainly helps me just keep on top of the stuff. I can be in the kitchen and hear a headline and rush back to my PC, so it's very, very useful, and
Much
it's good
appreciated.
for,
Thank you.
yeah, good for making money, and potentially saving against losing money as well. So, and don't forget, boys and girls, Harry's again kind enough to offer us prizes for our NFP competition, so you can win free access to Livesquawk every month via that competition, which will be kicking off next week. So yeah, take part in that competition. You get to try it. Do you have any trials ongoing normally? If someone wanted to try you for a week or something, just
Yeah,
on
I
the
mean,
start?
if they come through you guys, then yeah, absolutely. We'll give people free trials of the service, and you can see for yourself really what it is that we do, and how it helps and informs a trading day. It's hard enough out there as it is, but to have another pair of eyes and ears on your shoulder and in your ear, just giving you a heads up to stuff, I don't see how you can. It can't be a help
Yeah,
to most traders out there, really. Even the
yeah,
technical
absolutely.
traders, I
Yeah,
find
absolutely, absolutely.
it works for them.
Yeah, staying on top of stuff.
Mm.
Cool. Thank you very much, mate. Right. Well, let's get cracking the show. Lost me sound. I'm going to just crack through the headlines, and I'll bring you in to talk about some of the bits and bobs.
Sounds good.
We're going to kick off with a bit of data overnight. Quite important data, really. Tokyo CPI coming out. This is the first numbers for March in Japan, and then it will follow up in a couple of weeks by the national numbers. A nice uplift in CPI there. Core CPI beating expectations, 2.2, and prior coming in high at 2.4. CPI overall coming in a point higher at 2.9 as well, although last month was revised down slightly. Their core measure also coming in higher at 2.2 versus 1.9 previously. So looks like we could be on for a potential hike, if not April. Market really looks circling May as a time when they may hike, but I think both meetings could possibly be in the frame from that. However, we then got the Bank of Japan summary of opinions from the March meeting. We had the minutes from the the February meeting earlier this week. Now we've got the summary of opinions, which is like the early minutes of the March meeting last week. Really, there's no clues into there as to whether they are closer to hikes. The summary was pretty much a tale of caution, caution, caution. Don't know what's happening with policy trades. Don't know if these wage hikes are going to be sustainable. There's global uncertainty. Blah 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 blah. Nothing in there really hawkish that I read through those lines, and they go through them one by one. One member said this, one member said that, etc., etc. So it was a tale of caution, but I don't think it changed the picture. And we've heard from Ueda and some of the others since then, pointing to maybe a more hawkish step forward. Australia, they've pulled their election date at the calendar. It's going to be 3rd of May. So it's going to be a few days after the Canadian election as well, 28th of April. So that end of month period is going to be a bit spicy as well. Data out this morning, and UK data, surprisingly, quite a bit of green on the board. Retail sales for February coming in positive. So that's 2 months on the trot we've seen positive numbers. Everything's fixed in the UK, it seems. Trade balance a little bit worse though. GDP, I think it was the final numbers that now for Q4, nothing really changed. Year on year was up a little bit there, so no real change overall for that. Core sales, so if you're stripping out gas and autos, also coming in quite strong. Harry, you go over the data and what the ONS write for what they're worth these days. Any particular components in there, reasons why we saw that strong sales, or are things looking better in the UK?
Well, it's a strong start to the year for sure. I think non-food store sales were the strongest for this month of February across all the main subsectors that we saw there as well. And I think over the course of the underlying sales were up as well, 0.3% to February, in the 3 months to February, compared to the 3 months to November. So I think generally speaking, we're not, in the big scheme of things, we're looking at a slowing growth perspective for the UK, outlook for the UK at the moment. But with retail sales, the consumers still out there and they're still buying at the moment. It was a poor Christmas, but the start of the year and the start of this quarter, and obviously we'll get next month, we'll find out the quarter as a whole. It's going to take quite a bit for the first quarter to show any kind of negativity on the retail sales front, and that's encouraging, I think, considering all things at the moment. Obviously, we'll have the national insurance issue coming in, the hike coming in at I think it begins at the end of this month, start of April. So
yeah.
that may well start to shape a different kind of environment for Q2. But for the moment, you've got to be encouraged by what you see on the retail sales front. There are other elements less, GDP, as I said, final read for GDP. As you said, not a lot in that really. It's very backward looking, and it's tepid growth, really. But we could see more of the same, I think, for this year. It's not going to be an outstanding start to the year, I think, for growth in itself. So it's just there's a lot of uncertainty, and I don't think that's going away anytime soon. So that could drive people for cover, and we're gonna have to wait and see on that front. Bank of Japan, like you said, is interesting because there wasn't really any clues in the minutes that we saw, but there's enough, I think, in that Tokyo read, and if it's backed up by the national read later in the month, for the BOJ to take action in May, really, and see another hike in May.
Yeah,
So that's quite an interesting one.
They do have a meeting in April. I think 4 weeks into April, or latter part of April,
Right.
before the May one, I think. So they do have two quickly on the trot. So I think they're both open, but we shall see. As you say, the data will confirm in the Tokyo CPI, and we'll see if maybe the yen pays attention to it, because it doesn't seem to be paying too much attention to what happens at the Bank of Japan outside sort of data swings and that at the moment.
No, you're right. I mean, but listen, they procrastinate as well. The amount of times we've thought they're going to do something and they don't do something, and so I think it catches the market. Market gets caught out every so often, and is more wary at times of BOJ than they would be of other central banks. I think that's fair to say.
Yeah, absolutely, mate. We're getting some fresh inflation data from Europe as well. France leading the way, France and Spain first with the early numbers, and pretty soft data, particularly coming out of Spain. We'll look at France first. Headline CPI there coming in unchanged at 0.8%, but the Eurozone measure coming in unchanged. In the end, was expected to rise, but came in unchanged at 0.9%. PPI as well, looking softer, not as much as last time though. Spain, though, that they saw a decent drop back in CPI, was expected to pull back 2.6 from 3%, came in at 2.3. Again, the HICP number coming in at 2.2 from 2.9% previously, so some softness there. German unemployment, that rose 26,000, unemployment rate popping up to 6.3% there. So we're yet to see, a bit early obviously, but we're yet to see all this investment optimism spilling through into the real numbers, if that happens at all. We've got the Eurozone final consumer confidence number, still in a negative for a change, as it has been for pretty much a lifetime of the series. We got some of the business numbers as well. So the business climate, as it's called, coming in softer at 95.2, again, was expected to rise slightly, but it pulled back. Same in some of the other measures in industrials, services. Services, industrial looked a little bit better. It isn't as crappy as it was last month, but services pulled back to 2.4%. What is most interesting is that these consumer inflation expectations rose once again, that up to 24.4, and this is business selling price expectations, i.e. what firms think they can get for selling. That rose as well to 11.4. So this is more sentiment survey data pointing to higher inflation thought of by consumers and businesses. We also got the ECB survey of inflation expectations as well. This is for February data, so it's a bit lagging. Also sticky. 1 year expectations coming in at 2.6% unchanged, was expected to fall to 2.5. 3 year expectations staying unchanged at 2.4%. I want to ask you about this because, obviously seeing all the data as well, we're seeing a lot of these sentiment surveys, not just Europe. We've seen it in the UK. We had the YouGov City inflation expectations yesterday. The US with the Michigan, the Conference Board. We're getting a lot of sentiment that inflation's going up, and central bankers seem to be ignoring it for now. Are they right, or are we heading for a 2021 situation again?
I think they're wary of expectations, but I think they tend to look at the long run expectations, and they seem relatively happy with the state of affairs there. So I think it's one to watch, but I think near term inflation expectations tend to be volatile and less looked at by central bankers. I know that was a sentiment that was raised last week with Powell and the FOMC. So, and I think it's the same for the ECB as well, and for the Bank of England to a degree. So they'll tend to look through short-term inflation expectations and look at the longer term as a guide, really, for their underlying views. But listen, we've all done the shopping. We all see it. Nothing's getting particularly cheaper at the moment. We're not seeing prices level off. Every time I go to the shops, I'm astounded at how much it costs to buy a few things nowadays. So, and I don't think it's going to get any easier with obviously all the trade issues we have at the moment, and just the uncertainty that brings, not knowing from one day to the next. Hence why I think, again, central bankers want to look through the noise and look at more longer term inflation expectations. But I think it's one to watch for sure this year. And I think, generally speaking, prices are on the rise, and it's just the pace at which they rise will unnerve central bankers more than the fact that they're going to rise, if that makes sense.
Absolutely. Yeah, I'm a big watcher of sentiment data because it can lead to seeing those expectations turn into hard fact, if you like. But it's all about the trend. Okay, we've got a bit of a trend going on here. It's not a light switch. You don't see consumer expectations going up, a couple of months, and then the next month inflation goes through the roof. That's not how it works. It's a mood thing. It's a subtle shift. You've got to have to watch over several months before you really start to see it. But if you do start to see it, that's when the central bankers then pick it up and start noticing it. But for trading, this is how you can get in some early trades. If you see this sort of thing continuing, I'll be sniffing around for opportunities, because you get in early. That's what brings the big driving moves, like we saw in this moment when inflation shot up. That's what brings the big trend moves in currencies and other assets, I think.
Yeah, big time. Price action for inflation, it's really important because it tends to be the mandate for most of the central banks. The growth is left to fiscal policy for the most part, and it's really the inflation and the watching the inflation that matters to central bankers. So they are sensitive to this. And as I said, as you said, they look at the underlying picture and the trend, and they want to try and get ahead of that curve and ahead of that trend wherever possible.
Yeah, and usually they fail.
Yeah, they generally
Like they did for you,
slow to it.
Right, let's jump on to some of the data from yesterday quickly. Just go over that from the US. We had the final GDP numbers there as well, a little tick up to close off the year, 2.4% from the 2.3 prior. That's still down from the 3.1% in Q3, but still closing off the year on a decent footing. A few people picked up about the PCE data within that looking a little softer. Again, this is old hat. We're just about to close off Q1 and we got PCE data today, which has been spoilt again by Powell at the FOMC. So we know what's coming from that. Jobless claims, once again, doing nothing, surprisingly. So don't need to worry about that. At some point, it will pull a wobbler and then the market will no doubt crap the bed as it likes to do on those occasions. Fed's barking says moderately restrictive policy stance is a good place to be. The Fed is waiting for uncertainty to clear before acting. Fed's Collins says holding rates steady for a longer time seems appropriate. She's cautiously, realistically optimistic about the economy. So covering all bases there. Banxico, they cut their rate by 50 basis points as expected, a unanimous vote, taking rates down to 9% and say they could have more adjustments of similar magnitudes to come. The EU is preparing its response to new tariffs announced by Trump and his team. There's no timing yet, though, says a EU Commission spokesperson, but the answer will be timely, robust, and well calibrated. Then later on, a envoy at Washington told the EU to brace for more tariffs before any talks would take place. So potentially there's something more coming for Europe on top of what Trump's already set aside. Mexico's economy minister Ebrard says we are at the negotiating table with the US Commerce Secretary to protect auto parts made in Mexico. So they're getting deals done. President Sheinbaum says we'll give an integral response to the US on April the 3rd. And a lot of people, a lot of countries now going to be waiting until after the deadline before they elicit their responses, because a lot of these people have got ministers, trade envoys, all rushing to Washington to get deals done. So I think we're in that situation again, Harry, where the deadline's approaching, the threat's on the table. Are we going to be heading for more can kicks or even some deals? He's getting people running around like headless chickens again.
In terms, sorry, my words are not coming out right now. In terms of the trade talks and everything else at the moment, you can see the US auto companies are suffering as well. And I was reading something. What was interesting about all this is that if any reciprocal tariffs that the EU brings in on the car industry I think it won't affect hardly any of the US car makers, and so I don't know if they want to go that way. Reading between the lines with von der Leyen, they want to come back and be robust about this, that, and the other. But ultimately, they don't want this trade war with the US any more than any other country wants it with the US. And I think you'll end up seeing them a softer approach to this ultimately. And there's brinksmanship involved with this as well, with Trump and what he's likely to do and how he retracts at the last minute, and there's so much uncertainty. There's so much in terms of head fakes on this one. I can't read it at the moment. It really is hard to sort of judge.
Yeah.
But as I think you're right, until April 2nd, no one knows anything. So that's the day everyone's going to be watching, and as traders and as markets, that's when you're going to get that a bit of certainty about it, and some potentially big moves.
Yeah, it seems like people like Europe, like Mexico, we're understanding how it all works now. There's no point in coming out with retaliation now if he's not going to go ahead on April the 2nd. So hence why they're all going to wait, see what happens, and then retaliate. Which keeps the volatility down a bit, I suppose. We've not seen some of the moves in currencies anyway over this deadline yet that we saw on the prior deadlines. But like you say, it's affected more in the assets involved, like the car industry. You know, there's GM on the screen there, got an absolute clobbering yesterday and not looking like it's bouncing much at all yet today. So yeah, we're ticking down to that deadline. Right, on Ukraine stuff, there's been a big gold shindig in Paris, and the lines from that are that participants remain doubtful as to whether Russia will implement the announced partial ceasefire. Zelensky was talking about the minerals deal, which is still yet to be signed. Says the US is constantly changing the terms of the deal, but he doesn't want the US to have the impression that they oppose a deal. Says whatever deal gets cobbled together, it will need to be studied, and lawyers are working with the US. As for another meeting between Russia and US teams, that could happen mid-April, according to Russian agency TASS, for another meeting in Saudi Arabia. So that'll be meeting number 2 for those guys, and see what they can cobble together from that. That's all on the headline front. I don't know if you've got anything, H, that particularly need to talk about, or something you've heard that I've missed or anything.
No, I mean, as I said, I think everyone is pretty much waiting for April 2nd. You know, it's the end of the month. You know, people are ducking and covering at the moment. So I don't, from a fundamental point of view, I think all eyes will be on next week and what happens there for the most part. And yeah, hopefully we're going to get a bit of a quiet weekend because everyone's going to be sizing up what's going to happen. You know, Asia indices overnight saw some losses. The nervousness at the moment, and it's just, you know, maybe it's a bit of end of month, so there's a bit of volatility, a bit of thinner market now, heading into the end of the month. But I just think it's all really about next week, and irrespective of what data's out, other than non-farm on Friday, it's going to be about what happens next, and everyone's got a front row seat and bag of popcorn waiting to see how to react to it more than anything else. And it's opportunity. It's good opportunity at the moment out there if you can get it right. But listen, and it's different for the intraday trader to the investor. For the investor, they want a bit more protection at the moment from all the volatility. But for the intraday traders that they're out there, this presents opportunity and dislocation at times that you can take advantage of.
Yeah, absolutely. It's good vol for short-term trading, but you're right. You got to be quick. You got to be nimble, and you got to take profits while it's there at the moment.
Yeah, don't fall in love with stuff because it won't be there.
Yeah, you don't get a chance to fall in love with stuff. You turn your back, and
there is that.
It's turned on you. But one thing I want to ask you about, and it's about the quid, because I was expecting the worst this week, particularly from the Reeve stuff. I thought, you know, we could be heading for real trouble if the market didn't like what she was selling. It seems like she got all the bad news out well in advance and hasn't really affected the market. Are we going to switch to the pound maybe being a bit more resilient, because we are going to be less affected by this tariff stuff, mostly because we don't fucking export anything, and there's a potential super trade deal on the table that's happening. Just for this period at least, could we see the pound maybe being a bit more resilient than some of the others?
I think so. I think, listen, you can criticize the current government for a lot of things at the moment and the way they've handled the economy and the sentiment they've pushed out there since they took office last May. You know, we're coming up to a year now of them in power, so there's no excuse now that the Tories didn't do this or the Tories did that or whatever. This is on them now. But I do think what they handled well is the diplomatic element with the new president, and they've seemed to be a port in the storm, and a voice of reason, and something that people, the Europeans and the US, can pivot on and use. So I think from that perspective, the pound is probably a safer place to be at the moment on with that respect, domestic issues notwithstanding. So yeah, I think the quid was getting beaten up quite a bit, I think, and it should be seen as a bit more of a safe haven play at the moment. But again, like we said before, until we know how badly we're going to get affected by that, and I think it's going to be limited in terms of how we're hurt. But I mean, nothing's unconnected now, and so even by default, we're gonna have issues. Take the car industry, for example. We do a lot in terms of parts. But parts come to the UK. Parts then get sent on to be put into other parts of the cars, and just things like that. We're gonna get hit inadvertently by this anyway. But yeah, I think to get back to your point on the pound, I think at this moment in time, it's not a bad place to be. Just to be that halfway house, I think at the moment.
Yeah, absolutely. I think as usual, you got to pick your pound pairs.
Mm,
Something like versus the dollar is going to be a bit flighty still. I'm looking at euro sterling mainly, and I was actually short the pound via along this one this week on that Reeves stuff. But as
right.
soon as that didn't happen, I got out of that. I think we might be heading, if we're going to see it becoming a bit of a Teflon currency, I think we could be heading to some of these lower levels down in the
Okay.
low 82s, which I'll be interested in just for sort of trading the range. Let's go on a clean chart just for trading the range. We've got some big, huge levels down here,
Mm.
sub 83 that we held previously. So from a tech standpoint, that's going to be where I'm looking to trade it. But in the middle here, yeah, I might see if we get any rips on the month end stuff or anything else to maybe try some shorts. But I think we're probably heading a bit lower in this one.
Just quickly on the month end stuff. Do you think most of the activity went through yesterday, or do you think there's still a little bit more to do today?
Yeah, there's probably dribs and drabs. Yesterday was obviously the main one because it was value
Mm.
date end of month. As I mentioned to your guys on the chat we're on,
Yeah.
it pretty much kicked off at 3:30. We saw the dollar getting sold, which is counterintuitive to what the models were saying. Yet
Mm.
5 minutes into that fix, into 4 o'clock, it flipped the other way, and that's when the dollar buying came in. So on one hand, I'd say there's potentially a lot already been done, the main stuff, but we've still got 2 days of till the end of the month, so there's probably going to be some dribs and drabs. It's worth remembering also that a lot of countries are on this T+1 settlement thing now.
Oh yes, yes.
So this is also another value date for end of month for everyone on T+1. So that's going to be something I'm looking for later as well. But yeah, the bulk should have been done, but I wouldn't be surprised if we see some more bits going through. So same thing, 3:30. Keep an eye on the clock. Keep an eye on those prices,
Yeah.
and we'll see if we get any moves from that.
Fair play.
Cool, thanks, mate. Right, I'm going to have a quick look at gold, which has had the break overnight. Let's come into a chart you can actually read. So we had this level up here, these prior highs, 30, 55, 57, wherever you want to pin it. We've had the break up now, a new high up here. Bit of a pullback. I just mark these little levels because, as usual, we're at all-time highs. We've got no price history to rely on, so we just got to see what develops along the way. So I just had a couple of these little lines in here this morning just to see if we get any action with it. We've had a break down below this sort of 70 area a couple of times now, one hold. So we're not closing below it. So I'm going to keep that on the chart for the moment, see if it builds into something else. Potential for a little bit of resistance ahead of that prior high around this 77 area. I did go with a buy stop. Those of you in the chat room would have seen that yesterday. I had a stop in at 30.60 that's been triggered. I've managed to get a little bit off up here. The main levels now, though, to look at is pretty much the high, okay, because it stopped there for a reason, and the break point. Okay, so whatever happens in between there and there, the picture builds up, but your main levels are going to be what happens another run to that high if it holds again, or what happens if we get a test of the break point. If that holds, and you aren't long and you want to be long and you're looking for the dip, that's the level that you need to keep an eye on. If we're breaking back under there, though, then this is looking like a quick false break. But if we hold there, then there's every chance that we can then keep this move going. And it's the same pattern we've seen time and time and time again. We hit resistance, we break resistance, we hit it, we break it. Okay, but for now, don't be trying to short every rally that you get, because there's no price evidence to say we've hit a proper top just yet. H, can have a quick look at copper. I don't know, you've got your commodities guys on the board. Have you got any thoughts on what's happening this one? We obviously looking at the tariff situation, but there's also a bit of tightness still in the market, isn't there? In metals in general.
Yeah, I mean, I'm not a massive copper head, if you like, on that front, and it's not something I look at. But my guys on the commodity front do look at this. This is Chris Stadley's sort of territory. But I think, again, looking at some of the research out there, is seeing tightening copper balance expectations for the coming year. Inventories as well, and apparently some physical premiums are other big drivers of this current copper strength that we're seeing at the moment. Again, you've got to look towards the tariffs and China and stockpiling and everything else that goes on as other sort of drivers for this. So I think there's a lot of inputs at the moment into the base metal that are helping to keep momentum. And but yeah, I mean, I'm not a massive, as I said, base metals guy on this one, but I will dig out some data from my guys and send it over to the group if you want, and I'm sure they've got some things to say about it.
Yeah, cool. That'd be great, mate. Always welcome. Okay, well, let's have a look at something. I know you've got a bit more of a handle on the bond space, treasury space, gilt space. What are your thoughts going on with yields at the moment in general? I mean, given that we know that US yields, we've got the Fed on hold, so there's no real input from that side of things at the moment, apart from obviously the market guessing when the next cut's going to be. There's been a lot of talk about, we're seeing a lot of rotation out of stocks into bonds, but then you see bonds, selling off. What are your thoughts on the market now? And if you want to look at gilts, as another example, even after Reeves, we're not seeing gilt yields pulling back. Is that still investors wanting to, charge that premium against the finances, or is this just more of a risk play? Hello. You're on mute, mate.
I knew it was going to happen at least one time. I had this great insight. I'm not going to go through it again now. No, in terms of well, for the UK and the sort of the risk profile at the moment, I think because she's ridden, and listen, trust me, this was a spring statement. It was never supposed to be anything monumental in this statement, but I think because of what's gone in the past, it's just led people to be a little bit cautious around the government's sort of plans. It's as steady as you go. It was a steady as you go event ultimately. So I think you can turn back to more about the growth profile for the UK, and as I said, it's tepid at best. So I think gilts will be a play versus a yield play versus the US versus Europe for this year, and I think those are the kind of moves you're going to see, as opposed to anything outright in the UK economy that lends you to want to take in more UK debt than anything else. What would I say? I mean, there was still a bit of steepening, I think, going on yesterday across the curve, and I would personally, I tend to like gilts. I think the less instant we have now, and the more we can, you want to see a bit of growth come back into the country. I just don't think we're gonna get there yet with it. So I think from that perspective, gilts will be a pivot play against other bonds. out there, government debt at the moment. I do think I think we've got another ratings uh, period coming up as well for the UK. So it's going to be interesting to see what the rating agencies think really, and if they want to change their outlook. I think we've got a double A steady rating for the likes of S&P Global and likes. So that would be my next thing. What do they think of the last statement and ultimately where borrowing's going for the UK at the moment? She didn't touch borrowing yesterday, or it wasn't really touched upon. So it's as you were in autumn. So it's going to be interesting to see really what the rating agencies think of that.
Yeah, absolutely. Because they gave a budget, a sort of fiscal star, if you like. They said,
Mm.
yeah, it was pretty responsible, not big borrowing. Excuse me, not big getting into debt and everything. But yeah, it might be a different kettle of fish, particularly after those OBR forecasts. Anyway,
Yeah,
for the year
it's
ahead.
no good. It's no good doing that, and if you're driving the country into
Ditch.
recession territory,
Yeah,
that
driving it
doesn't
into a ditch.
it doesn't help, does it?
No, exactly. Right, I'm just looking at the clock. I think we will call that a day for today, unless there's anything in particular you want to highlight in some of the markets, Harry.
Um, no, I think we're in a holding pattern. I honestly, I look at where we've gone for equities at the moment and for the stocks, and I look at that as the kind of canary in the coal mine. They get a bit panicky and a bit flighty, and it doesn't take much to turn them at the moment. We've seen, if you've seen year on year performance for equity markets and the S&P and the Nasdaq, for example, you've just seen nothing but blue sky. It's just quite interesting right now that this pullback and the tentative nature that you're seeing going through equity markets, whether that turns into more of a run heading into after April, and how quickly really the US decides it wants, because I think some of this is engineered. I think some of what you've seen in terms of sentiment and in equity markets has been engineered by the Trump administration, because they want to try and temper inflation in the way they see it being done, only for them to get the Fed to start cutting again. So I'm more interested really. I just think everything pivots around the trade talks and everything going on there. I don't, you look at the Middle East and he basically called a win on that, and that's not done. That's now flaring up again.
Yeah,
This Russia-Ukraine situation, he wants to get ahead of that, and hopefully we'll get that from the human perspective, that people stop dying and people stop bombing each other. But how long will that last, really? He's looking for quick wins, and these things don't tend to be quick. You have to do the work, the groundwork to get things done. So there's a lot of question marks for me, and because of that, I do think there potentially is an issue coming for equity markets, which ultimately then starts to affect sentiment, especially in the US, because they're so tied with pension contributions and everything else, that we could start to see this thing he could lose control of it if we're not careful.
yeah.
And that's not what he doesn't like that. That's not his thing. So
No.
that's what I'd be watching into the second quarter.
Yeah, you sound like a true central banker, mate. Lots of uncertainty. We need to wait and see.
Well, yeah, and that's going to be their fallback for central bankers, and valid or not, they're going to use it because it gives them a bit more time to try and assess what's going on. And in this country, with what you've seen with the ONS now, it's not just the ONS. You start defunding all these organisations that do all the survey data and the collation, and you're going to get fuzzy data. And if you get fuzzy data, it's harder for you to then make correct policy decisions.
Yeah, I'd question whether they'd make it if they had the best data in the world. But
No,
anyway,
yeah.
that's another show altogether. But
True.
yeah, we probably draw a line under it there. Well, thank you very much again, mate, for coming on board. And yeah, we'll definitely have you on the show again. Don't forget, if you want to check out Livesquawk, livesquawk.com, go and have a look there. And as I said, we'll have some prizes from Harry on the NFP competition next week. Ali, I'll look at your trade on Monday, mate. It's been a week and a half already, and it's been a long one. So thank you, Harry, for coming along. Have a great weekend, mate. And yeah, thanks to all our viewers for following us this week. We'll catch you all later on. And if not, have a great weekend, everybody. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.